Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 9th, 2021, and Bitcoin is looking like it's about to drop. I apologize everyone. I thought I was live. I actually started on time, but I didn't press a certain button, and so I wasn't live. So I'm sorry for the wait. I guess you missed a few things. Let's see. So I'm in a trade. I'm shorting, and I was kind of managing that, looking at what it was doing, and it looks like we're all good. I'm trading this on Phemex. There are always links in descriptions for Phemex if you're going to use Phemex to trade. This is what I like to use as an American. I can't use Bybit from the US. Anyway, this is basically what I'm looking at right here, my trade. This is my stop, and I was trying to see how high this B wave was going to go, but it looks like it's over. It wicked to the 786. So we're good. Anyway, you've come for something different. You've come for how low will Bitcoin go, right? Where are we going to go with this drop that I'm saying is imminent, right? So let's zoom out. First and foremost, before we answer the question of how low will we go, first let's see why we're even calling for a drop, okay? So if you look at this, you see that we have our top of April, right? We have the top here, and we had an A, B, C correction. We had a B wave, which we recently just ended. Recently, by recently, I mean like, a few hours ago. Or, yeah, maybe a few minutes ago. And we're finally getting into our C wave. So basically, if I'm correct, you're going to see serious price action to the downside. They don't call them motive waves for nothing. You're going to see some impulsive sort of moves to the downside. Hey, cool. Nice to see you as well. Thanks for joining. So basically, the first part of this drop, right, and we're on the 12-hour time frame. Again, I'm anticipating that we can go all the way down here. We can go all the way down here. It could be a running correction, right? It can stop somewhere here. In any case, what's important is if I'm trading this, which I am, I will definitely trade this price action. Whether it's up or down, I'm going to trade, right? The first part of it, I'm actually looking at a drop to this EMA, this 50 or this 144 EMA, this green line right here, right? And that's confluent with what? With a projection using Elliott wave principles, using the Fibonacci projection tool. I basically take the length of A, the retracement of B, length of A, retracement of B, and I keep pressing the wrong button. One more time. Length of A, retracement of B. Between 1 and 1236 is our target, okay? And the book I like to refer to is Elliott Waves Made Simple. It's not perfect, but it's pretty good. It's a pretty good starter. You'll see that I've highlighted here that principle. Wave C usually ends between 100% and 123.6% of wave A in a regular flat correction, which this is. Why do we know it's a regular flat correction? A regular flat correction is a correction where the B wave retraces to between the 786 to at least the 786 of the A wave. And so this is at least a 786 retracement. This is 100% plus retracement, right? Because we made a new all-time high. So we know that 100 to 123.6 percent target is valid. The other thing I want to say is, I put a little note. Whoops, wrong window. I put a note here because this is correct, but it's not 100% correct. Sometimes wave C only retraces to the 786, and I've found that out through backtesting and using this to trade quite extensively. So I added that note, just as an annotation in the book. Let me know if the music's too loud, if you can't hear me. It's just kind of bombastic. Anyway, wrong window. That's my trade that I'm managing, but not really right now. So that's pretty much where I think we're going to go in the immediate short term. I anticipate that this drop to the mid 50s happen in 2 to 3 days. I don't think that it's going to take that long. I think we may get a large portion of it in the next 24 hours, right? So that's pretty much what I'm seeing. And why am I saying that? Why am I so confident in saying that the time, right? One of the hardest things to predict is in the market is time, right? When things are going to happen. You can see a pattern, but you're not really sure when it's going to execute. One of the reasons I'm saying that it's imminent is because the nature of the C wave is impulsive, right? So we have corrective waves and we have impulsive waves in Elliott wave theory. Corrective waves take forever. They always take, quite some time, especially complex corrective waves. And you can see here, we took quite some time correcting. And finally, when we got into the C wave, the impulsive portion of this corrective B wave, it happened much faster. Hope you can see that, right? Now, this wave, this C wave, is all impulse. So if this took whatever time this took, this song is annoying. Hey Google, next song. Hey Google, next song. It's just, it like gets loud randomly. I don't like that. Anyway, sorry about that. So if this A wave took, it took, if A took 8 days, right? And B took 12 days, C can pretty much end in 3 or 4 days, okay? That's what I'm seeing. That's the nature of impulsive waves. They just happen like that. And that's why when things start running either to the upside or to the downside, it catches people unawares and they can't catch it, right? But the trick is, if you can chart, if you know sort of how to read a chart, you can see this coming, right? You can kind of, not predict, but you can anticipate this kind of action. This is why I used the word imminent. It wasn't clickbait. It's literally reflecting the nature of the impulsive wave, which is fast and furious, right? So now that if we zoom in, we're literally just entering the impulsive wave, okay? And I'm going to show you this by going back in time. I'm going to show you this in Bitcoin's history, not recent history, okay? Not like any time too far off. This alarm is just for my trade, just to notify me if I get run on with this B wave, but I should be okay. Anyway, just in case you were wondering. So, why is it happening now? Because we finally reached the top of the B wave, okay? And after the top of the B wave, you get an A, B, C correction. And that C correction should take you in. It should segue into the C wave proper, okay? So, how do we know that it's the top of the B wave? I'm sorry about yesterday. I said that this was the top of the B wave. I flubbed. And I paid for it, right? Quite literally, because, I'm trading all of this stuff. And so I got stopped out. But then I turned around and longed it once I realized we had one more wave to go. I took my profits and entered another short. Took profit on that this morning. Entered a long for this B wave. And now I've entered already a short to ride this down. Okay, now this is clearly 1, 2, 3, 4, 5 waves up. Right here, 1, 2. Let me turn the magnet off so it doesn't slow me down. It doesn't have to be exact. I'm just trying to illustrate the fact that this is over. And I showed this in the morning's episode. If you missed it, just really quickly, looking at stochastic RSI, you have the 0 point all the way at the bottom. Let's make it bigger so you can see. 0 point all the way at the bottom, so the start of the impulse. The top of wave 1 is at the top of the stochastic RSI. The bottom of wave 2 is at the bottom. The top of wave 3 is at the top. Okay. The middle, the top of the third wave of wave 3 is at the top, right? That's another telltale sign that that's wave 3. The 4 wave is at the bottom here, right? And the 5th wave is at the top, right? And then you see a little bit of bearish divergence between the 3rd wave and the 5th wave, just a little bit, not much, but anyway, it's there. So those are your 3 impulsive waves, and those are your 2 corrections. This is your complex correction, this is your simple correction, right? We know that price likes to be balanced and alternate in complex and simple, and there's a reason behind that. It's pretty much like if price took too long, if price corrected and it didn't take long enough, the complex correction gives the opportunity for buyers and sellers to act. That's why you have always alternating complex and simple corrections within an impulse. Okay, so that's pretty much confirmation of the 5th wave. And then another confirmation, more importantly, is that you finally break the 21 EMA. If you're subscribed to the channel, you'll know that one of the easiest ways to track an uptrend, to track an impulse, is to just watch how it responds and reacts on the 21 EMA, right? If it's continuing to ride the 21 EMA, it's gonna continue going up, right? And so this is an easy way to ride extensions, because extensions are terribly difficult and confusing to count in real time. After the fact, fine, but as they're happening, very complicated. So pull out your 21 exponential moving average. The number 21 is a Fibonacci number, if you're wondering. And the 21 exponential moving average just works so well doing this. So this is why I like to use it. This is why it's always on my charts. Now, the 21 exponential moving average is broken. That indicates a break of trend. That indicates we've lost the uptrend, okay? Now you get your B wave, which is your your relief rally. And that's exactly what we're in now, or we're just leaving. Okay, we're literally just leaving that. So this is why this C wave is imminent, because you're going to get a C wave of this A wave, and that C wave is going to segue into the larger C wave, and I'm going to show you that in a second in history. So I'm going to stay on the 45-minute time frame. We're going to go back in time to the last time we had a B wave top, okay? And I believe, just bear with me 1 second, I believe it was April 13th. We're going to just double check that. Okay, here we are, April 13th. Okay, and we do see a B wave. Okay, so what we had an uptrend. We had an uptrend. We had an A wave. This is your A wave. This is your B wave. And this is your C wave. I hope everybody can see that, right? Really quickly. So we're back in time. We're still in Bitcoin. And we have similar price action, right? Similar activity. So it'd be helpful to see how price reacted, right? So this is your ABC action, like just like we had an A wave in Bitcoin, right? And then we had a B wave. This is the B wave that it's similar to the B wave that we're in right now. So after that B wave topped, what happened? Let's zoom in and see. So you get an A, right? A B, and a C. That C begins, that C wave of this ABC correction after the B wave is the same, it is the one wave of this larger correction. And so we can check that. How? We all know that wave one should only retrace between 0.5 and 618 maximum. It can retrace as little as 382, but let's see. The top to the bottom, and you see that it kind of respects it. We do have some wicks above the 618, right? But let's see. There's some wicking above the 618. A bit too much. A bit too much. So this may not be your impulse, right? Because, you know, price action generally respects that 618 level in a one wave, okay? So what I'm seeing here based off of that is this is an A, B, C. That's pretty much what this is. And then your impulse is in the C right here, okay? Obviously, there's also impulse here. So we're going to get that drop in impulsively in this C wave because remember, this A is made up of an ABC itself, and this C wave is 5 waves down. And then you get a B, and then you get the real C, if you will, okay? So just remember this. A, B, C, right? A B, because this is A, B, and then a big C. And that's pretty much the bulk of your drop. And then you get kind of, you know, some funky kind of price action here. So let's go back present day, okay? Remember that. A, B, C, B, big drop. Okay? And actually let's not measure it yet. Let's go back to present day and see what we're getting and what we can anticipate. So we didn't change time frames. We're still in the 45-minute time frame. The B wave just ended. So we can anticipate A, B, C, right? So we can anticipate going down to 65K, have a B wave, and then a big drop in C, okay? So A, B, C, and that C should come down. Let's go back in time and backtest this, yeah? Backtesting is a powerful thing, right? If you've never tried it, if you're serious about charting, you should definitely do this. Test your ideas, test your skills, and look at price action, because this is where you really hone your skills and you get precise, because you really master your craft by seeing price action and really not having to wait for it to print out, because you have so much to work with, right? You have 10, 12 years of charts in Bitcoin, but yeah, in other assets, some assets have that much price action, but not that many. Anyway, let's see. So we have this A, B, C. We are here. So in present day, we're here. This is why I said drop imminent, all right? And this took all of, from the end of B, the drop in C of this A wave took all of 14 hours, okay? So that was 14 hours of downside action. Let's see how much it retraced. So how are we going to do that? Again, you want to use your trend-based extension, your Fibonacci trend-based extension. So the distance of A to the top of B, and you should get, remember, a retracement between 1 and 1236. What do we get? A retracement between 1 and 1236. Do you see that? Then you get your B, right? And your B came up, it should come up between 0.5 and 618 of this A. So let's see if that is accurate. So we're going to use our retracement tool, right? The top of A to the bottom of A, and you do get that retracement of B between the 0.5 and the 618. You see it where it ends, right here, between the 0.5 and the 618. And finally, you get the big C, okay? The big C wave that comes all the way, actually it goes like this. It really nukes, yeah? So how do we measure that, if we can at all? So let's take, again, the Fibonacci extension tool. Let's take A, retrace it as high as B goes, and we should get a retracement of 1 to 1236, right? And you see that there's a lot of price action over here, but we actually retraced to the 2236. Do you see that? That was a large nuke, and then after we kind of hung out at the 1618, we came down even lower. So this is this was, when was this? This was April. Yeah. This was April. So this is what I'm seeing. I think that if you're going to trade this, it's safest to, you know, use the 1236 or even the 1618 for this C wave target, okay? And take profit, and then if there's a subsequent drop, you know, you can trade that. But the worst thing is to be winning a trade and then not take profit at the right time or get greedy, and then all of a sudden you lose your trade because you get stopped out and, you know, all your gains are gone. So just be careful with that. In any case, in the immediate short term, here's what I'm expecting, here's what I'm anticipating: a drop between 1 and 1236 of this A wave. So let's go back to present time. And we see here Fibonacci extension tool again, retracing the B wave, the entire B wave. Actually, let's use the magnet here to be more precise. I just used the magnet to catch that, the end of that wick. That's why what I just did, in case you're wondering. And it looks like it's likely that we come to about 65, between 65 and 64.9, okay? And that would be a likely target. You can see this 144 EMA creeping up to support this C wave. And if we go back in time really quickly, you'll also notice that in our C wave, you have the, well, this A, B, well, we weren't supported by 144 EMA. I thought we were. We completely smashed through that. So yeah, it's likely, but I wouldn't bet on it. I would conservatively take profit at the 1, which is the minimum retracement of this move, which is the likely minimum retracement of this move. Obviously, we know that the minimum retracement is 786 if you really do your back testing, but I think 1 is realistic, especially given that we're likely to lose this EMA, and so we're most likely going to find our way down to this one. So I'm actually going to change my profit, or my TP, my take profit, and I'm going to go and do this. And the reason I'm doing this, for those of you who may have missed this, or who may not know, when I trade, I use the actual exchanges, their charts. And the reason being is it's that much more precise. If you use the analogous charts on TradingView, you lose a little bit of precision, and it does affect your trades, especially if you're a precision trader that uses specific Fibonacci levels. So this is why I like to use Phemex is I don't like to use it. I like to use it because it's more precise, but at the same time it gives me less information. You'll notice that the candles are a little more sparse than they are on TradingView, and it's just slower in general because I have a premium account on TradingView, and that doesn't necessarily translate here. In any case, I will take, let's go back in the 3 minutes so I could see this. Oh no, actually no, I want to be on the 30 minute chart. Okay, and we see that this is our A wave, this is our B wave. We seem to, right now, if this was our B wave, we seem to have gone down and gone up again. And question is, are we making our two wave? Are we in a two wave? Remember what I said in the beginning of the stream. Impulses, when you're impulsive in price action, it's quick. When you're corrective, it's usually slow. Price action is typically probably 85% of the time in corrective state. That's why things don't happen at the speed of light, and people have to wait because things are always correcting, okay? So I think what we're in now is a two-wave correction, and we can actually verify that really quickly. Let's see if this is, and that would make sense, right? Because we have an A wave, we have a B wave, and now after that you have 5 waves down, right? This is exactly what I was saying. And if you measure that retracement of the two wave here, it should not exceed the 618. Oops, I pulled that wrong. It should pull from the start of the one, or the purported one, to the bottom. Okay. And we see that we did get a quick wick into the 618, but we largely respected that level. Okay, so this is likely a two-wave correction, all right, and this is likely a one-wave, all right. Don't know for sure, jury's still out, but it's likely, okay, and we'll see. We'll let it play out. And it's important to say that sometimes when you're trading, because if you don't tell yourself that you're not sure about something and you go ahead and trade it as if you are, and you're wrong, you get stopped out and you lose the trade, right? So sometimes not knowing, and I have this written down in my trade journal, sometimes not knowing and the unknown and the uncertainty is some of the best places you can be, some of the safest places you can be as a trader, to make safe, calculated, risk-managed moves. All right. So, what are we looking at? Oh, I'm setting my profit, my profit points. Okay. So if I take my extension, just like I did on the charts, and I take from the top of A to the bottom of A, and then I retrace the length of B, and I calculate the 1, my take profit should be 65,450, okay, just to be conservative. Okay, and there. So this, you're trading with me. I'm showing you everything, right? As most of you know, I like to trade small amounts, but high leverage, okay? And in doing that, I compound. But small amounts, high leverage, and I like to keep really, tight levels. You know, I use fibs, so precision is my calling card. And when I do it right, I do it really right. When I do it wrong, it's ugly. So anyway, this is what I'm anticipating. Here's where I'm going to take profit. You look left, you do see some activity here, so there's going to be some support for price action here. So I anticipate that when this profit point is hit, around here, we're going to retrace and get a B wave. That's going to take us up again, and then the real action starts, yeah? So let's go back into our chart and draw this out. So we're seeing what? So this is the one. So this would be A, B wave retracement. We think C is going to come down here, right? 5-wave impulse down around here. And then from that, we're going to get most likely, maybe tomorrow morning, my time, you know, Eastern Standard Time, we get that B wave retracement. B wave retracement would be, yeah, that was right. B wave retracement to around here, okay? And then another nuke down, okay? So this is what I'm seeing in the charts, and this is what we saw back in April, right? Last time we had this exact same scenario. You see that? Boom. A, B, C. C actually retraced, remember, between 100 and 123.6. So, and then you have your B wave retracing between 0.5 and 618. Then the real action starts, okay? The real action starts. This is the mega, super duper, like, you know, hide your wife, hide your kids type dump, right? And this probably is going to, so if we had to put time stamps on it, this B wave, or no, we're right here. This C wave took approximately 12 hours, okay? So we can expect, so in 12 hours, it'd be 6 a.m. my time. So we should expect that to continue, to complete around tomorrow morning. Then the B wave, take its time, retrace, take another day, 24 hours. And then this crazy C wave, it's 20 hours. I mean, that's crazy. 20 hours. So basically 12 hours, and then what did I say for this B wave? 24 hours. Okay. So next 12 hours we can expect, let's go back. So I couldn't be this precise this morning because I just didn't have time. So next 12 hours, let's see, let's make this 12 hours. So boom, 6 a.m. Don't forget to like the stream, guys. If you're getting value and you're in here, if you pop in, just like it. Just, it'll give the opportunity for other people to also see this material if they're interested in it. Okay, so in 12 hours, I anticipate that we end up here somewhere, and then 24 hours with the B wave, and then boom again. It'll take about 20 hours to make the gigasend. So what's 12 plus 24? That's 36 plus 20. That's 56 hours. So the next 56 hours. Okay, that's my sort of prediction. Next 56 hours, we should see ourselves down around the mid 50s. Okay. All right. So that's pretty much it for me. I hope that answered the question of, you know, how low we can go. where we're at, what Bitcoin's doing. I hope that was helpful. I hope that was useful. And yeah, like the stream if you haven't yet. Subscribe to the channel if you haven't. And I wish you guys good luck, whether you're trading, whether you're investing. Yeah, best of luck in this market. It's fun. It can be very challenging at times. But, just keep your head on about you and learn as much as you can. The more you know, the more you make, I believe. All right. I'm going to end the stream. Have a good night, good day, wherever you are, wherever you're at. Bye.